Thursday, March 20th, market analysis. Stan Ehrlich, good morning. 9:47 California time, middle of the traditional trading day, 6:30 California time to 1 o'clock. The stock market indexes I always go through first and then go through futures and sometimes stuff like cycles and chart formations and psychology of trading, a variety of things. So here we go. We have the stock market indexes topping out with a double or triple top formation basically during November, December, and one or two highs in early this year, January, March, February. Breaking out of the lowest low, below the lowest low, between all of those highs, and it basically stands for all of the charts except for maybe the Russell that did the same thing. We have a downside breakout. The minimum downside breakout says we should be getting down to about 5,500 for this ES chart, E-mini chart, which also goes, of course, for the micro E-mini. They're exactly the same thing, except for being 1/10 the size, margin, profit, loss, etc., for tick size for the micro. So, great vehicle, by the way, to start learning how to trade, getting some skin under your belt, so to speak. We have a market that has dropped off sharply. It bottomed out around or on March 13th, just a few days ago, at support level in some cases, in oversold condition in every case, and had a bounce. But the bounce was basically only, excuse me, about 2 days. And now, for the last 3.5 days, we're having trouble at around the same price levels, which instantaneously implies we've got some resistance stopping the move up, more selling than buying, obviously. So on my chart here, we're not quite up to resistance level that I had pegged quite a long time ago. And I do think there's a chance that we might get there. 57.96, and maybe even up to the original breakout of 58.57. But I'm very skeptical about that. Even if we got up there, I think it would be a very good place to consider going short, especially if we got overbought and we maybe have some sell signals. But that hasn't happened. We're now having trouble right here around 57.64, up or down a few ticks from there in the last 3 out of 4 days. The closing prices and or the high a couple of days ago, are still in the same ballpark also at 57.27-ish. And now, after this morning's rally, which tried to make a new high and did not, we're back down to approximately unchanged, frankly, a little bit lower on the day. And let's go look at the way it's acting on a 1-minute basis in a moment. But if we start getting below 56.50, the lows that's 3 and 4 days ago for the MES and ES, then I think we're going to start heading toward the bottom, break into this support area and below it, and get to my minimum downside objective again around 5,500, which is a minimum. I can see it dropping down even more potentially. I'm a little concerned that the several months that we spent way up here for this double or triple top is a little bit more bearish than I originally expected. But I've pretty much got these swings forecasted. So I think we might be starting to move down today. 1-minute chart. Come on. Here we go. So 3 days ago, we came up to here, 57.58. Topped out, went down for a day and a half, came back up, made a new high. But 57.70 is not much of a new high. Went back down, and that was yesterday late afternoon. Came down slightly, went up overnight, did not make a new high, went back down some, went back up overnight this morning, actually, at 7:55 California time, and didn't so far make a new high. It stopped. About the third time now in about 3-4 days when it did that. Resistance. If we start to make new lows for this morning's session, then that would be below 56.81. That to me would signal the likelihood of it dropping below yesterday's low, which is very close to the day before that, and that would probably get broken as well, which is again the low from the previous day. Also, in the last 3.5 days at this point, that is going to set off some more bearish bells for me and probably cause me to expect a test of the lowest low for the move, which I just said can make things more bearish to get to my objective. Okay, fine. SPY, essentially the same commentary, different numbers. The way that it's moving and so on, you would expect the same thing as opposed to the ES and the MES. Of course, it's the son and grandson of the daddy SPY. Next, Spider, 1 minute, trouble here. That's how it begins. Let's see what happens. Next, QQQ. Yesterday, couldn't make a new high for the last week or so. Today, tried it again, couldn't do it, came close. All three are basically at the high or the top end of my resistance area, which of course used to be support and essentially still is until we start closing again below the bottom of the yellow zone. Then old support, where it is right now, becomes resistance. Now, that happened, but it didn't stop it. But the top end of the resistance area did stop it so far. So making it below Tuesday's low, I think is going to cause it to challenge last week's lows. And there we got the last leg of the move down starting to get to 458, my minimum downside objective that I talked about at least way back on February 27th, like a month ago. I saw this double or triple top. I talked about it for sure. And I'm surprised it was oversold for so long, but that is something that happens in very strong, and weak bear moves. Strongly down, so to speak, but you could say weak. Now, the 1 minute QQQ couldn't do the trick, couldn't make new highs for any significant length of time, 2 days, and we're starting to slip. And cough. Next, NASDAQ, daily data, slightly lower on the day, doji inside day, no higher highs. That's what I'm concentrating on at the moment. It doesn't have enough strength, not enough buying power. People don't believe in the market strongly enough to push it up high enough at the moment. And down we come on the 1 minute chart. Again, making a new low for today is probably going to push it down at least to the low of yesterday and or the day before that, and maybe even lower yet today. Next, YM, Dow, bottomed out in support area and oversold finally, but that was a week ago. We've had a rally back up to a little resistance area, which now has a little bit more evidence that it's stopping the rally. Yesterday's high was right on the top of the resistance area, and today was just a little bit above, and here we are, approximately unchanged. Now, if we get below yesterday's low, all of these charts I've talked about so far, well, no, that's not true. This one will have an outside down day, a bearish engulfing, but unfortunately, it's nowhere near overbought, so I'm not going to get my green red sell signals like we did on the top of the market back here. I reiterate, people, my ER signals, red and green bars, are frequently major, profound, intermediate to longer term signals that produce really big moves. Not all the time, certainly not every time, and I got to say maybe around 50% of the time. But otherwise, the stops that are used to protect myself from losing much money are well within risk and not a large loss and tight and take me out before I look like an idiot. So next, YM, 1 minute, slight higher high today, but look where it is. 4261, let's call it, is just a little bit under a bunch of resistance support back here levels, and it stopped the market moving up, almost touching the same prices, not quite. I think we could be seeing new lows. Let's look at the the RTY, which is the Russell 2000. Support level oversold, bottomed out almost exactly where I would expect it to do. And maybe I said something like that on the day it did it, but these recordings are made middle of the day and it could happen, in the last half hour or last half of the day. Now, up we came, and nothing particularly interesting about yesterday's high and today's high, except that they're almost the same. And now we're starting to lose a little upside momentum lower on the day, some. And I think we did make a higher high by a very small amount, not necessarily that important. But if we make a lower low, especially by a chunk, then we're going to have some sort of reversal. I'm not sure I would call it some particular name, but a failure to stay strong, an attempt to make higher highs, or it did by a small amount, and then flipping down. So I think we could start something here. Down. Sorry about that. Next, Russell 2000 got up just a little bit higher. Oh, just ticks, it looks like, than yesterday's high. And did have a second attempt at it, by the way, but couldn't do it. And now we're challenging the low of the day so far, pretty soon, I think. And then if we get below 2059.4, we'll be making new lows for a few days. That's going to open some eyebrows, and I think it's going to cause it to gain downside momentum. Next, let's look at the bond market. Please remember that the bigger pattern here is the bullish engulfing ER buy signal. And I told you a minute ago, sometimes very important, profound turning points, October 23rd of 2023. And a bullish engulfing ER buy signal on the exact low, January 14th of this year. Very, so far, profound turning point. Not close to, but the low day. I think this is a very broad 1.5 year approximately double bottom formation. I've seen better. The lows aren't that close together, like 10-year notes you're going to see in a moment. But the move up has been significant, and it started to develop a head and shoulder bottom since last November when we had a little double bottom. Now, that's the first shoulder. It's a little pattern inside a pattern. The bottom is my bullish engulfing. It also formed a head and shoulder bottom, which worked great. Its minimum upside objective has still got marked ever since it got to there. I started predicting it before January 28th, I'm sure of that. And finally, on February 27th, it reached it. Not many problems, giving it great detailed analysis on the way up and down, but it worked great on the average. So up it went more, stopped rallying, that is, at March 4th at this price level, 1917, a little bit lower to another important low, high. Damn it, I'm not going on December 6th. And now, for the last couple of weeks, has come down some. Now, starting around probably March 5, 6, 7 or something, I drew in this green circle, and it hasn't moved since. Before, we actually got down to touching the top of the green circle, and only one exact day before my forecast of a low, I thought was going to be in the circle, but at least it touched it, and that was supposed to be Friday the 14th of March. It bottomed out on the 13th. I was hoping for 1511, I believe I was talking about, and it bottomed out a bit higher than that at 1530-ish. I don't know what was the low that day. The low that day was 1600 exactly. So I was one day early and about a half a point too high, several days before it happened. And now we're in way new high ground on today's rally, breaking through and above the resistance area. But there is a momentary problem. Most of the rally has been given away. We're now trading at the bottom of that resistance level, which is now a little bit of support. And it's okay if it closes here. It's almost low and last. So there's no gaps to close. Back down to approximately yesterday's high. And this would be an idealistic spot for it to turn back up, which I hope it does. And I just don't want it to get below that 1530. Now, today's the very far right head edge of that green circle. So it's the last day of time that I thought the market might bottom out within that amount of time. And I'm super happy about it making a way new higher high since the low one day earlier than I expected. So I'm pretty much happy with this, but I don't want it to keep sinking. It could turn right here. My personal opinion, I got to say this because I'm getting a little bit sticky with my commentary. Past performance is not indicative of hypothetical results, and some inherent limitations apply. Next, 10-year notes. Very strong rally, approximately the same commentary, not as low as I expected, not quite on the date that I thought it was going to be, but we just went flat at the last shoulder. So there's no particular prominent low like there almost always is at these turning points. There's usually a very prominent 1 or 2 day, low or top. So this is working great. Remember, and I've got to go back to bonds real quick. The minimum upside objective on this head and shoulder bottom, which we are now all of a sudden within reach of breaking out, would be breaking out of it if we close above 119.11, and it goes down a tick or so a day. But that's the breakout point in a couple of days, and that produces a minimum upside objective, not bad, 128, almost 129. So what's going to happen at that point? We're breaking out of the giant double bottom formation because the head and shoulders said we should, and that produces another upside objective of 146. This last low I got a signal on January 14th could be the lowest low for many, many more months to come. 10-year notes, the same thing, different numbers. Okay, crude. Rallying nicely. Not quite yet a new high for a couple of weeks. Looks like it's about to do it. That would reinforce the fact that it got down into oversold conditions and pretty close to support, but I do love it when it gets into the support areas or bounces off it accurately, but didn't happen. But it got some little double bottom there. So I like what I see. I think we're starting to rally. I'm not sure. The minimum up would be about 70, 71. That's good. And that's only $2 from here, 68.80, 68.08 at the moment. Okay, up. Heating oil, same thing. Trying to break the resistance right there, right now, closing at already the high, a little above resistance would be nice. Making new highs would be even better. I probably should erase this old bear trend line. It doesn't seem to have any relevance anymore. And I'm looking for a move up to the little resistance area to start with the 2.3, but then the next one is a 2.4. That would be a pretty good move. Either one of them could make some good money, but one's a lot better than the other one, obviously. And I do think it's going to happen. Next, natural gas. The big picture I've got in front of you right now is a longer-term chart, still daily data, but this chart goes way back to August of 22, 2.5 years. Came down a chunk buy signal right there in the bottom. Started a very, very large, long sideways trading range, which is very, very dull and boring for most people, including myself. And then it broke down out of it to the downside, hit a low. Came back into resistance, couldn't do anything, came down to modest new lows. And the whole mess here is slowing down. The big move down was very fast, and it went sideways, and it went down slowly. Came back up again, went down about the same rate. You could draw a bear trend line underneath the support line, all of these lows. And finally, we get another bottom, of course, with an AR buy signal on the bottom. Remember, all of these are real time. I can't cheat. I show you them when they happen. And up we go, making a small head and shoulder bottom down here, part of a larger head and shoulder bottom, exactly what I've been showing you on other charts we've just looked at. It worked. Broke out, tested support, came up, minimum upside objective fulfilled, February 17th-ish, give or take a day, maybe the 18th, and then went up some more. Major historical resistance we bumped into in overbought conditions starting February 20th. Came down a little bit. still in that same support and resistance zone. Worked its way back to higher highs, and that was now on March 10th, and I'm going to expand the spacing here. Whoa, 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 whoa. And rescale. Okay. Had a bullish engulfing at the bottom of the break. Not a buy signal because it wasn't also oversold, but I like them. I use them a lot. Bullish engulfings are good by themselves, but much, much better when you correlate them with other tools. Up you go, up you go. Resistance, top of the resistance area, backed off a couple, and then all of a sudden you had a spike up with a lousy close below previous highs. Like I've said, that's very dangerous. Tried to get up, couldn't, close a little lower the next day, and we're coming down, down, down until last week. We bottom out, no particular reason why, for 3-4 days at the same price, give or take nothing to speak of, and then rallied for a couple of days. Now, that was yesterday's high. Today's high is almost the same thing, and we're coming down to guess what? Low and last at a potential neckline, but there's a problem. If you take the measurement from the first shoulder right here, February 20, to the highest high right here, March 10th, you get that number of days. Whatever the heck the number is, not important. You take that number of days and you stretch it to the right, and you don't get now. You get March 26th. That would be the ideal day for the market to top out from a timing standpoint as far as head and shoulders are concerned. So we're early if this is a high. So that's what's wrong. We just might bounce off of this, fiddle around for a couple of days, and on the 26th or close to it, come up a little bit higher than yesterday and today so far. And that would be to a price of about 4.3, and then turn down. Don't you see I'm doing the same thing I did with bonds, which has worked great? Same process, time frame, previous tops and bottoms, same pattern. We'll see what happens. Now I am 1, 2, 3, 4, 5 days before proven right or wrong. Next chart. Gold. Overbought now for 5 days, new high, but also very close to a bearish engulfing ER sell signal, which would turn red like that one, like these other three in here. Moved down for about a week, moved down for 4 or 5 days, moved down nothing. It lost some money on that one. But this one could be really good. It looks like it's in the perfect position for it. I just have to get below yesterday's low and then stay lower than the previous day's close. That's what I need now. And it is lower on the day a bit. I'm not sure that number is very correct. 4.2. I'm not sure I think that's an error. But I see lower levels. So I'm looking for a reversal. I hope I get it. And then a top. Then I'm bearish for a bit. Silver, I have to say, way back when we were overbought on May 20th of 2024, I think there's a shoulder. No signal per se. Came down to a signal. Bought it August 8th, 2024 at the bottom day. Moved up in general. Not that I kept all the trades for Christ's sake during that time, but we did get a low day for a long-term trade. Came up to a high, overbought, stopped, and then went down basically until 12/31. We all see that in hindsight 2020. But this rally is now close to about the right time. Just a moment. Close to about the right timing, almost to the exact day. I was so far a little early, 1, 2, 3 days early on a pattern that started back in May, 10 months ago. And the timing, therefore, is just close to textbook perfect from the timing standpoint. Here is your marker again for the amount of time. And it measures from the high day till, well, I'm a little bit too far to the left. Sorry about that. Probably until March 28th again. Oh, boy, same date. So I really should be shifting this over to about like that. Price levels should be a little lower also, but I've already gotten too high, but not too high to kill a formation. So I'm going to do that, but this is good enough. I like this. It's a little higher than the first shoulder. That's okay as long as it's not too close to the top. It's overbought and it's starting to turn down. It's just slightly earlier than I expected and slightly higher than I expected, but that's good enough. If I had drawn a circle, it probably would be the left edge of it and maybe the higher end of it, but still looking for lower levels. Support's going to get broken. The bottom of the support area at 32.4 is going to get tested and I think broken. And then we're coming down to the next levels of support and resistance. And that is going to cause, if it happens within the next couple, 3 weeks or something, a head and shoulder top to have formed, last shoulder to have formed, and a test of the neckline, which produces a breakout minimum objective of 2370. Wow. Big move down if it works out correct. Platinum, not the same thing. We did get a ER sell signal in the high day exactly 5/20/24. Overbought, bearish engulfing, both indicators and price pattern, bearish engulfing, are custom slight variation on the Japanese original or Wells Wilder's original RSI. I learned RSI from Wells himself in the late 70s and sometime during the 80s. So, I like what I see. I'm happy it's topped out in the resistance area. It's now been 2.5 days since. Great. I'm sure I made commentaries about it closing badly on this day, but I didn't know the close at the time of the YouTube, so I'm glad it did. But testing resistance and being overbought, I surely would have said. Okay, doing fine. Looking for a move down. Both other metals tell me south. Why not platinum south? And I can support that concept. Next chart is copper. Overbought, new highs again, third day overbought, getting pretty close to the historical highs, or the high rather, for a long, long period of time. Way back, come on, mouse, way back on May 20th of 24. I don't think it's going to reach that on this particular wave up. Looking for a top sooner than all the way up here, and a test of support. But you basically have to be still bullish. There's nothing major here about any kind of a super duper top yet. So a bit move down to support, and then probably another move up, maybe new highs again. Here we go with green. My long-term bullish support levels, story, bottom building situation, I can still talk about. Nothing's been ruined. We have a minor new low for a couple of days. I have to stay above basically 991 in order to keep smiling, but we're not going up. We're going down a little for a day or two. Right now, up 4 cents, no bullish engulfing, but that would be nice. Nowhere near overbought, oversold, kind of between a rock and a hard spot, but I'm looking for a rally at this point. We do have, oh, good. I looked at this a couple of hours ago and it wasn't green yet. We have an outside up day, bullish engulfing, and the reason why it's green was because it was oversold within the allotted number of past days. I don't have to be oversold. It's nice on the exact same day that it turns green, like that one right there. And this didn't quite do it, but this is an example of being over bullish engulfing within the allotted number of past days and still working out very well for a few days rally. And then, of course, it developed into something much bigger. And then we have a sell signal on top. How nice. And a buy signal on the bottom. How very nice. And now we've got another buy signal. And of course, I have mentioned innumerable times in the about 2.5 years I've been doing daily, except for vacations or getting sick or something, these YouTubes. There's 660, I think, or 605 of them. Okay, so they are oftentimes part of topping out or bottoming out formations and not necessarily the highest day or the lowest day of the time frame. They are sometimes part of it. And here we go. I think it's part of it. So I'm looking for more strength now. I'm looking for resistance to get tested and broken, and that means up to at least 44.76. And now I'm looking for 47.5 and higher. There could be, and now I'm going to have to point this out again. I think I talked about it a little bit yesterday. There's a chance that this is the first shoulder low, February 27th to 24, give or take a couple days. Minor double bottom in there. Lowest low exactly was February 23rd of 2024. Then the low that was made on May 9th of 2024, that's the quote unquote inside shoulder, which has a little bump in here, not to be ignored. You got the bottom of the market oversold. You got now in reverse a little bump in here or there. Then you got the inside first shoulder, and it does have a bullish engulfing buy signal. Now, last week, do we have the last shoulder? Maybe. I should draw on my annotations on this, but I will do it later. We have a bull trend line. Not that that's particularly important, but it's nice. Across the two bottoms, it did not get broken, and oversold conditions tested it. Wow, today's the day. I think it's going to start to work up from here. I've just given you all the reasons. If all of that is correct, now I'm going to draw in the neckline off the highest high since the first shoulder formed and the highest high since the head of the formation formed. And that's my neckline right there. So we're going to see if I'm right in the next couple of months, probably a higher high than 48.60, a break of the neckline, and then the minimum upside objective I'll draw on for you. Take the lowest low of the move, measure up to the neckline on the same vertical day, in this case daily data charts, vertical, time frame, whatever. Grab that little measuring stick, and I'm pulling it up and plopping the bottom of it on the breakout expected level. Sometime in the relative near future, I can go and pull this to the left and extend my neckline a little further. Be careful, be careful. And then go over to here. It's not going to change things much. But now this is the first time I've forecasted a move up to 62.11-ish. If this finishes this giant 1 year double shoulder, head and shoulder bottom, first shoulder, second shoulder, part of it, first shoulder, last shoulder, up. Next chart. Big support level in soybean meal, new low for a couple of weeks, not good. This is just misbehaving terribly. We are getting closer and closer to ruining my story, but if it gets down to the previous low, it might be oversold at the same time and then turn around for a little minor double bottom, which would really be part of this larger pattern starting in June of 23, almost 2 years ago. Not quite. So there's long-term bottom picture developing. I just have to figure out the short-term stuff fiddling around here. Corn, doing okay. We really did bottom out on March 4th, oversold, close to support, and it's got a head and shoulder also. The first shoulder low has an ER buy signal included, for Christ's sake, on the bottom low exactly February 26th of 24. Bottom of the market is a double. I think the low is the same price for both days exactly, around 8, 26, and 27 of 2024. And for Christ's sake, it was part of the double head and shoulder bottom formation at the time itself. So this low is part of a smaller head and shoulder and the head of a larger head and shoulder at the same time. These are very rare, but I've seen in 53 years I've been watching charts, a few dozen of them. Neckline good, upside objective met already on the small pattern. That's come and gone totally. The small pattern is, if you want to use a wider viewpoint, the whole thing is the head of the larger one where we just made the last shoulder low. March 4th, and we could be starting to rally big time, longer term. Can't be real sure about that yet, but I've got to say it when I think it. Next, a little bit of a triple bottom here on wheat, not behaving like meal. New low for a few days, nothing damaging so far. Still trying to justify strength. Need to close above 575 to look better. Next, cattle right up to the previous highs, almost exactly in the last hour or two. I looked at this a little while ago and it wasn't that high, but I did draw in that line across the tops. Here we are, overbought, double top potential. Perfect place to consider going short. Risk should be small. You're going to be putting a relatively tight stop in. It'll damage the double top. That's your original idea in the first place. If you're right, boy, that could be coming down quite a lot. Hogs. Support, not doing anything interesting. Kind of got a pass on Miss Piggy here. Let her go for another day. Back to the E-mini. Down a little over a point. What does the 1 minute look like? Not much different than when I started blabbering here. The 1 minute on the spider coming down a little faster. At the moment on the QQQ, and the 1 minute on the NASDAQ bounced and coming down again. Okay, you guys have a great day and profitable trading to you.